Hey folks, good evening. Welcome to another money space. Of course, with me, Kalu Aja. And of course, on this space, we're talking money, the economy, and of course, finance. And today we are talking around credit scoring, the whole topic of what's your credit score, how you can increase your credit score, and why a credit score is important. That's what we're talking around today. It's a very, very important topic because you need a credit score really for anything that involves credit, not just credit, anything to do with your daily, day-to-day life. You need credit scoring. So that's what we're going to do. Spend at least an hour or so to talk around today, right? And then we'll just see how we can perhaps take questions. It's going to be recorded if you're on YouTube. If you go to I just shared the YouTube link. We're going to be on YouTube, so that way you can do a lot of, you can get a lot of the visuals. I also try to share the visuals as well here on Twitter, so that way I want you to follow, so you can actually sort of get the feel of what I'm going to talk about today. Very, very simple topic, and I think it's going to really, really impact most of you that are listening. All right, so let's start with it, right? So let's kick off with what is a credit score and what is a credit report. Those are two things I want to basically talk around today. What's a credit score and what's a credit report, right? So a credit score shows how responsible you are with credit. Simple. So when you have a credit score, that shows how responsible you are with credit. It's just that simple, right? How responsible you are with credit, that shows up as your credit scoring. What does responsible mean? If you take a loan and you pay back on time, then according to the lenders, you are a responsible borrower. Responsible means that if they give you a loan tomorrow, you are able to pay back. That's very, very huge for you, right? So essentially, your credit scoring, your credit score shows how responsible you are with your credit that the institution has given to you, right? So essentially, when we say want to raise your score, we want to make you a bit more responsible, right, with the lenders. Why? Because when you are responsible with the lenders, you can get a lower credit scoring. So I'm going to share a group of names, both in Nigeria and the US. We have who scores your credit. It's going to be a credit agency, right? In the US, we have about 4 of them. In Nigeria, we have about 3 of them. I'm going to share those names. So if you're on YouTube, you can see it. I'm going to share on Twitter as well. We've got Equifax. We've got Experian. We've got TransUnion. Those are the American ones. So you've got Equifax, you've got Experian, you've got TransUnion. In Nigeria, we do have Credit Direct. Those are all the Nigerian firms. They track your credit, or they report that how responsible you have been with your credit. They report that. So we've got Credit Direct from Nigeria. So we've got First Central Credit Bureau, we've got the CRC Credit Bureau, we've also got the Credit Registry as well. So 3 in Nigeria, I think about 4 in the US, right? These guys essentially, when you take a loan, not when you spend, when you take a loan and you pay back, that means you're responsible. We're going to get more into the details of that. And the more responsible you are, then the cheaper that you are able to get credit going forward. That's the whole idea. It's a very, very simple concept. Your credit score shows how responsible you've been with credit. It's reported by these agencies, the Equifax, Experian, TransUnion in America, or the Credit Registry, the CRC Credit Bureau, or the First Central Credit Bureau. It's reported by them to the banks or to the lenders giving you money. Your credit report is now a detailed history of how you have been or how you have run your credit for a number of years. So if you've got credit for 5 years, you're going to have a 5-year credit report that's basically going to show how you have run your credit for those 5 years. That's essentially what it is. Very, very simple, right? Now, what is your credit score? What is good? What is bad? Essentially, again, this is a very, very simple concept. If you have a high credit score, then your credit is good. I.e., if your credit score is high in the 800s and the 700s, then of course you've got a high credit score. That's essentially what it is, right? Again, I'm sharing the slides on Twitter and also on YouTube. If you can, just go straight to my time I use to the scores and the visuals. It helps you to follow as well. So on the FICO range, credit scoring starts from say 300, which is very, very poor. It starts from about 300, it goes all the way to 850, which is very, very exceptional. So if you're 300, that's poor. If you're 580, or if you say you're below 700, that's still fair. You are going to get the credit, but that's still fair. It's not even good. If you are below 740, that's okay. You are average. That's about good, right? When you start to go about 740 to about 780, that's very good. You're going to get the credit, but at the best rate. And of course, once your credit score starts to go above 800, of course, that's very, very good, very, very exceptional. So it's a very, very simple way to understand this. The higher your credit scoring, the better for you. So what do we mean by better? Better essentially means what you can borrow at the rate, what we call the annual percentage rate that you are able to borrow at. So if we now go back to those numbers, right? If you are borrowing at 800 credit score, right? Essentially what that means is that you're going to get the best rates. The best rate meaning you're going to get the lowest rate possible. So if your score is from 750 to 850, you're going to get the loan, not just get the loan, at the lowest score possible. But when your credit score is give or take about 700 to about 600, it's likely you might get the loan, but then start to raise your annual percentage rate up and up and up. So from 850 to about 700, yeah, you might get the loan. You will get the loan, but what rate? That's the point. What rate do you get that loan? Which is why this space is very, very important. Because if you understand how credit scoring works and how credit scoring affects you as an individual, even as a demographic, then you don't understand how to play the quote-unquote American game. In America, they don't operate by you just paying your bills. They operate by how you are running your credit. It's a credit economy. When most folks leave Africa and go to America, in Africa, we're very, very conservative. If you want to buy a house, we buy the house by saving and then we buy the house. In America, it's different. They expect you to take a loan. Same thing with your car. They expect you to take a loan to buy the car. Because if you don't have that credit scoring, it's sort of, they can't score you. They can't place you, so you then get the default. Either you get a no or you get a high score because they can't price you in as a risk factor. This is very, very important as you're going to see going forward. There's a direct link with this and ownership of homes. If you don't get a credit score, it's hard to buy a home. If you don't get a home, it's hard to, as a demographic, get into the American dream. That's what we're doing in this space, right? In Black History Month weekend, because we want to explain this is very, very important for you, especially if you are in that demographic, right? So our next slide is going to talk around the actual impact. We were saying it's going to affect your score, but let's actually do numbers. What does it actually mean? Again, if you're on Twitter, please try to look at the slide I'm sharing right now. I'm just going to give you the actual numbers of what it would mean if you have a low credit score or if you have a high credit score. And of course, the guys on YouTube just are getting those visuals. And thanks guys for that. So if you look at these, what we're sharing now on the slide, this is the average mortgage scores based on your FICO. Your FICO is a type of credit scoring. You look at the FICO score, that's going to be the first column, say 620. So remember what we've talked about. If you have a score of 620, that score is not that good, right? Now, if you take a 30-year fixed rate mortgage, because you have a score of 620, then that score is going to give you a range. This is just an example. Don't really see, this rates might change, but this is a picture of what's going to happen, right? Use it as a picture. As at say December 6, 2024, you'd have gotten an interest rate 30-year at 7.71%. That translates to a monthly payment of $2,806.11. So your total interest cost over 30 years is going to be $549,199, right? So if you borrow at 7.71% on a 30-year fixed rate mortgage, you're going to pay back the lender about $549,000 in interest. Because your credit score was 620, that meant your interest you borrow is at 7.71. But the same person, right? Let's say the same person had a credit score of 840, which is going to be exceptional. And then you try to buy that same house, same neighborhood, same credit terms. Your APR, your annual percentage rate, which is the interest you're going to pay, right, is going to fall from 7.71 to about 6.69. That translates to a monthly pay of about $2,564. Your total interest cost you're going to pay back to the lender is going to be $462,212. So you're going to go from $549,000 to $462,000. Same house, same neighborhood. The difference is just going to be the interest rate that you are paying on the home. And what's driving that interest rate, a big factor driving that interest rate, is your credit scoring. It's going to be the same if you wanted to buy a car, if you want to buy a phone. The higher your credit score, the lower your annual percentage rate, your APR, or your interest rate, right? Then the lower your monthly payment and the lower you pay to the vendor. So if you look at this, right, it just tells you that how many folks do you think can afford $2,800? The difference in buying a home, when you go to buy a home from your lender, they're going to ask you what's your income. They put your income in, then they ask you, they have to do a calculation. They cannot take money from your income that would make you not to be able to survive. So they would remove your living expenses and then look at the income less those living expenses, and it's that expense that they would then take into to pay your mortgage. It's usually about 30%. So if you earn about $3,000, for instance, a month, you can't afford a mortgage if you have a low credit score, because when they take away your living expenses, you can't afford $2,806 a month. So as you can see, it's not just the interest rate that stops home ownership, especially home ownership for minorities. It's also the lack of knowledge about how to build up your score and what a score even means. If you get into debt, if you have a lot of debt, then your APR, your interest rate is going to go high. Why is it going high? Because your credit scoring is low. So of course, that means the answer for us is that if we can raise our credit scoring up, we can reduce the interest rate that we're paying to the bank to borrow money. That reduces our monthly payment. That then enables many people that have the same income to then qualify to buy a home. There are many things to buy a home. You have to have your down payment, you have to have your debt to income, yes. But we're just focusing on the credit scoring for now. So this is just what we want to focus on that credit scoring. So you want to get that done because this allows you to qualify for more loan, to buy that home. Very, very important. This, if we just did the whole space today on just this slide, we are fantastic, right? We've learned. Okay, so now that we know that a high credit scoring allows us to get a cheaper loan, i.e. because our credit scoring is high, our APR will go down, which means our monthly pay is going to look better. How then can we then increase our FICO score? So we're going to do it in two parts. How can we increase means you already have a FICO score, correct? And then, of course, if you don't have a FICO score or you don't have a credit score, how can you get into this whole system to be able to get yourself a credit score? So we'll try to do two of them. If you listen carefully, they interlap. They interlap because it's going to be the same thing you're going to use to get one, and it's going to be the same thing you're going to use to increase your score, but they interlap. But let's just take a look at what we need to do and how this is scored, how your credit scoring is done. So again, guys, look at the visuals. They help you to visually follow. That's how adults learn. Adults learn by repetition and visuals. So I want you to look at the visuals and follow. It will make perfect sense to you. And of course, if you have a question, just request to speak. Send me your DM. I'll get your questions. I'm kind of looking at the DMs now as I'm looking at the slides. But once we're done in about, say, 15 minutes, I'll come back to your questions, right? Fantastic. So let's look at how you raise your FICO score or how you raise your credit scoring. If you look at this is from Experian, right? That's what I'm sharing. The most important thing to do when you have a credit is to first of all go get credit. So first of all, go and get credit. I'm going to talk about what type of credit. Again, like I said, most Africans that come from Africa to the West, we are conservative, i.e. in how we spend money, how we manage our money. We don't look at credit the same way the folks here look at credit. For us, credit is going to be, am I getting to bondage? Am I getting to servitude? I want to save and more. That's not how to look at it. Credit is an enabler, not a, what's the word I'm trying to get now? You have to get credit in the West. That's how they operate, right? When you're in Rome, do as Romans. So what type of credit is very, very important? I would say the easiest one to get, or the one I would advise to get, is to get a credit card that has 0 annual fees. So just holding the card has no annual fees. Very, very important. And if that card can give you a reward, maybe they give you cash back, fantastic. So let's say I get a credit card for $500. It's got no annual fees and it gives me a cash back. That's a fantastic way to start my credit. Remember, no annual fees, so you don't just pay for getting that credit, right? So now I have credit. So what do? Number 2, I use the credit. So I want to buy gas. I buy gas, $50 gas to fill my tank. When I buy the gas on Monday, I can wait on Sunday and pay down the card. You buy gas, you pay down the card. You can pay down the card anytime. Credit cards are paid end of the month, but you can pay down the credit card anytime. You buy gas on Monday, you pay on Sunday. You can pay on Tuesday, you can pay on Monday if you want, just pay the card. If you pay on time, you are getting 35% of your score towards that credit scoring. Your payment history is extremely influential in how you get the credit scoring. Very. So you can see that that's it. There's no financial engineering involved. Get a card or get a loan and pay on time. That's it. Get a card, get a loan, pay on time. You get 35%. Extremely influential. What's the next thing you want to look at? How much you owe on that card. So yeah, we get it. Life happens. You might have a credit card and your car goes bad and you've got to take an Uber, you've got to go buy food. So you put a balance on that card that you don't pay back in that month. We get it. If you are going to put a balance on your card, do not put more than 30% of what the loan approved for that card is. So let's say you've got a card for $1,000 and you have to carry over a balance. Don't carry over more than $300 to the next month. So you're going to pay interest on that $300, but try not to carry more than $300. That's 30%. The more you can keep your score or what you carry below 30%, the more you can enjoy that amount owned credit. That is about 30%. Your total credit usage is highly influential. It's not extremely influential. It's highly influential towards your score. So your payment history is the most important factor. Paying on time. Then how much of the amount are you owing? If you have a credit card for $1,000 and you only take 30% over to next month, you're fine. Try to keep it below as much as possible. Then what else? length of credit history. This way they get you guys most of the time, because you get into the US or you get into the West, into UK, and you say, I'm going to wait till I'm organized before I get credit. You see, credit scoring is 15. The length of your credit history is 15% of your score. So total, how long you've had the credits, how long you've had your credit card is very important. So don't wait. As long as you have the opportunity, even if it's just going to be a store card or a secured credit card, get it, and start to confirm to getting that 15% of your score. How long you've had the card is very, very important. So that means if you have a card that was your first card, you've had that card for a long time, try not to close that card, because you're going to lose out that 15%. I get it. If you've got two cards, maybe 3 months earlier, and you prefer the other card, maybe, but the length of time you've had your credit counts. So try not to close out the first card, the very, very old one, is giving you about 50% of your score, right? So as soon as you can, get credit. I've told you how to use it. If it's got no annual fees and it's got a cash back, use it, pay back. Use it, pay back, right? Okay, new credit. This is the important one. You go to a store, they'll tell you, oh, hi, your grocery is $500. But if you apply for the store credit, you can get a credit card and you can give 20% immediate credit to pay your groceries. Always say no. Every time they do an inquiry, when they tell you, do you want a store card? They are going to do an inquiry on you. They're going to they're going to run your credit. If they run your credit, that's going to be a hit on your score. The more times you run your credit, the more you lose 10% of your score. So new accounts opened are moderately influential, but they affect your credit scoring. So what I mean is, if you go to the bank to get a credit card, you go to the store to get a credit card, you go to the other bank to get a credit card, you keep on looking for credit, the system tracks you and the system says he's looking for credit. Why is he looking for credit? It dings you, so it takes your score down. So if you don't need credit, don't apply for credit. If you've got one, that's fine. Build on one credit card. Don't go get multiple, because the more you apply for credit, the more it dings you. And they might not tell you, we're going to run your credit. They will tell you, do you want to apply for a store card? It's going to make you pay 30% off. Or you want to travel on a holiday, and the airline will tell you, do you want to get this 50% discount on your ticket? That means they're offering you credit. They might not say it openly, right? So be very, very clear. Try not to apply for credit if you don't need it. Very, very important. And then this last one is one that's not really understood. It's called the credit mix. Credit mix is going to be 10% of your score. What does credit mix mean? It means if you have 3 credit cards, that's 3 credit products. Fine, you have that, that's fine. But if you have 1 credit card, 1 personal loan, 1 auto loan, instead of having 3 credit cards, it kind of looks better on how you are scored. So the mix of your credit is more important than the number of the credit that you have. So instead of having 3 credit cards, have 1 credit card, have your personal loan, have your auto loan, if you can afford it, right? Someone says, I'm just reading this text now. Someone says, should I take a loan to buy a car? I have the money to pay for the car. I always advise folks, this is a question I get all the time. If you want to buy a car, the car is $10,000 and you have $10,000 cash. You know what I'll do? I'll buy the car in cash for $9,000 and I'll take credit for $1,000, even $500. I'll take an auto loan for $500 for 5 years, just so it registers on my credit. I have the money. I'll take the money, put it in a bank, and do an automatic payment every month from that bank to pay down the auto loan. So I'm getting 95%. I paid cash for it. The $500 I finance, just so I get into the credit report, so that it shows that I have an auto loan and I'm paying on time. It's not the amount that you borrow that is important. is that you are paying back on time. Paying back on time is 35%. Amount you owe is 30%. Length of credit history is 15%. New credits, new inquiries, when you go ask for credit, that's the negative 10% of your score. The mix of your credit is going to be about 10%. Guys, this is how you build your credit. This is how you do it. There's nothing here you cannot do. There's no magic. There's no complicated formula. It's as simple as taking a loan and paying the loan. You don't wait till you want to buy a house, then you try to build your credit. It doesn't work that way. You've got to start to build your credit. When you get into America, you say, okay, in 5 years, we're going to buy a house, or in 3 years, we're going to buy a house. Start today. Because you're going to have 4 years of credit, paying on time, which means your score would be the 800. So when you then apply for that loan, you're going to get the prime, the very, very beneficial rate that are reserved for the very, very best borrowers. And how can you do it? Like I've told you, get a credit card, pay it on time, don't carry over a balance. So they are what we call secured credit cards. Secured credit cards. There's also what we call secured personal loans. I'm going to get to them next in the next slide. But this is what you want to get. And I'll explain to you why they are different from the other credit cards and why you need them. So this is the slide, guys. The slide about how much you pay and the slide about what you pay. This is what I want to get through to you guys today. It's very important you understand this, especially as a quote-unquote either a minority or an immigrant and all that. You've got to know how these things work, and this is how they work. This is why folks get cheaper credit than you. It's not racism, it's knowledge. You've got to understand how it works. Then you use that knowledge to your advantage, right? Very, very important. Again, I've shared a new slide. Credit score ingredients, 35%. You just copy this page, stick it somewhere, talk to your partner about it. This is your exam. So walk to the answer. This is how they are going to score you. Most of us, we go get JAMB scoring metrics, how JAMB marks. This is how they're going to mark your credit. So walk to the answer. Get a loan, pay on time, don't carry a balance, get 2 or 3 types of loans, don't apply for new credit. That's all you have to do, guys, and you're going to get to 800. That's it. That's it. There's nothing complicated about this. Let's go a bit further. So that's what I've said here, right? So this is a slide I'm sharing, how you want to improve your score. And the first thing I put there, and I put it in all caps, pay on time. Once you pay on time, you are essentially saying that you are a good borrower. When we started the space, I said your credit score shows how responsible you are with credit. The responsibility is if you pay on time. So pay on time, keep your card balances low, expand your credit file. It's not the number, but the type of credit. So you don't want to have 3 credit cards. Rather have 1 credit card, 1 personal loan, 1 auto loan. And I've explained to you about this auto loan thing. If you can afford to buy the car in cash, pay 95% in cash, take 5% credit. They will do it for you, right? So expand the type. Authorized user. Many of you still cannot be able to afford credit, even with all this stuff. Maybe you don't earn enough. Maybe you're a nanny. Maybe you are a student, so you don't have money even to pay for credit card. That's fine. Do you have an uncle? Do you have an auntie? Do you have a sister or brother over there? Can they add you as an authorized user? They don't have to give you the card. They can add you on their own card as an authorized user. Ask the bank. If you then use that card, does it show up on your credit scoring? If they say yes, this is a fantastic way to do it. Many kids that are maybe 16, it's not their credit, it's their parent credit, but they are on the card. So it reflects on their scoring. So for you, you're a student, you're going to university, you don't earn any income, you just want to go read, but you have a sister in the US, right? Ask her, yo, can you add me on your card? You don't have to give me the card. So she'll add you on the card as an authorized user. If the bank says yes, that scoring will reflect on your credit report, then fantastic. as she's using her credit, you are also getting that credit because you are also a quote unquote user on that credit. So that's a good way to do it without you getting credit, right? Don't apply for credit you don't need. Like I've told you, don't go to the store and say, oh, you're going to get reduced credit. If you buy, you're going to get reduced credit. It's a trap, right? Because the more you apply, the more you get that thing on your credit score. It takes you down. Not a lot, but it takes you down. Don't apply. It also tells them a story. They will ask you, why are you looking for credit? Right? Why are you looking for credit? Always review your credit report. So we've talked a lot about the credit score. The credit report is like they give you a report and they tell you, hey, this is what you've done this month with your credit. It's very important you review it because of fraud and identity theft. I'm going to get to that, why this is important. So I think, guys, by now we've got the answer to the whole space. Number one, just pay your bills on time. And number two, keep your balances low. Number three, expand your score, your number of types you have, right? There are many ways to do this. And I'm going to get into let me see if I have a slide specifically for secured credit. If I don't, I'll talk around what secured credit means and why I think you guys should go do that as a whole. I don't. Let me talk about secured credit. If you go to a bank and you want to get a credit card, it's the bank that is giving you the credit card. So it's the bank's money. So the bank is going to say, well, we don't know you. So we're going to run your credit. We're going to pull your FICO and we're going to see if we should give you a credit card. So they run your credit. If you're just a new guy to the United States, of course you won't have any credit. So they're going to come up as zeros. They might tell you, hey, I'm sorry, we don't know who you are, so we're going to give you a credit card. End of story. But there are cards called secured credit. So when you go to your bank or your credit union, you ask them, because if you're just new in America, just ask them, do you guys offer secured credit? If they say yes, what's the secured credit? It means you're going to take cash and give the bank will give you a credit card. So instead of the bank giving you the money, no, the bank is saying, give us cash, then we'll give you a real credit card. Why do you want to do that? Because you need the credit card to get a credit score and a credit report. If you simply use your debit card, it doesn't give you a credit score. Most times, if you want to rent a car in America, you've got to give them a credit card, not a debit card. Very important. So if you try to get a normal credit card, they don't give you a normal credit card. Go to the bank or to credit union and say, can I get a secured card? So you give them money, they give you a credit card. How much did you do a secured card for? Not a lot. Even if it's $100, that's all you need. Because you're not getting that card to go spend. You are getting that card to establish credit history. What would I use that card for? If I have a car, use that card to pay for gas. If you don't have a car, pick a grocery or pick a utility and pay for that utility. So it's every month your card is paying your power bill. End of story. You pay your power bill, you pay the card off. You pay your power bill, you pay the card off. Or you buy gas, you pay your car. You buy gas, end of story. You don't have to complicate it because the secured credit card does not report as a secured credit card. It reports as a credit card. It's the same credit card that everybody else has. So you're going to see that even without a credit scoring, without a credit profile, you then that's how you establish that credit profile. If you do that for a year, then the credit company will report that, oh, this person has a credit card and has been paying on time. The next time you go to the bank, they try to pull your credit. Of course, they'll see your credit file there because you have a secured credit which you have been paying on time. That's how you establish credit. It's chicken and egg. They will tell you need a credit card to get a credit score, but you need a credit score to get a credit card. So it's round and round. The way you break through is through a secured credit. And you can get a secured personal loan, exactly the same thing. You go to the bank, you say you want a personal loan, they run your credit, they don't see you, they won't give you a personal loan. But if you go to the bank and say, do you offer secured personal loans? They say yes. You give the bank money, the bank will take that money you've given them and give it back to you as a loan. Why? Because when you pay back that loan, the bank is going to report to the credit bureau that you are a responsible borrower. You are paying back your loans. That's what you need. So don't wait. Don't wait and say after 2 years or after I'm in school, I'll go get credit. No. As soon as you enter, go apply for credit or secured credit. Get your credit history going. get secure credit, pay it on time, keep your balances low. Let me go into a bit more detail, right? About, the space says, how can you fix your credit? We've talked a lot about today. How can you establish and just a small credit? What is bad in if you don't pay on time, it's bad, but it's not life killing, right? If you don't pay your credit card on time, yeah, maybe one month, 2 months, it's not going to kill you, right? It's bad, but it's not going to kill you. When you have things like you didn't pay your card for 90 days, or there was a short sale, which means you owned the home, right? You couldn't pay the home. The bank took your home and sold it to pay itself back, or you were bankrupt, or there was a foreclosure. Those things are what we call negative issues. They are negative, they are very impactful, and they stay on your credit report. So if you go and borrow money to buy a house and you can no longer pay for that house, and the bank has to come in to sell that house, right? They put it on your credit report and they leave it there. It can be there for sometimes 5 years, sometimes 7 years. This is where it hurts you, because you can't get a normal loan, like a mortgage loan, if you have that sort of thing on your report. It's a negative report, and all the lenders, not just your bank, all the lenders in America will see it. That's the whole idea. So if you look at the slide I've just shared now, this guy has a credit scoring of, so let's pick the biggest one. This guy has a credit score of 780. So he used a score of 780 and he got a mortgage, right? He didn't pay. So if this guy was bankrupt, his credit score will go from 780 to 560, just the range, 540 to 560. So he loses about 200 just because he was bankrupt. If it's a foreclosure, it goes from 780 to about 620. Short sale, 780 to 620. 90 days late on a mortgage, 780 to 650. 30 days late on a mortgage, 780 to 670. So when you are late on paying your mortgage, it affects your credit score. And mortgage is just what we're using here. We can use auto loans, we can use any loan. If you are late, it affects your credit scoring, which is going back to that point we made. Pay your bills on time. End of story. Don't, even if you just take that as your takeaway from today, just pay the bill on time. There is no abeg. Once you pay your bills on time, you're fine. And if you don't, the effects are going to be really, really devastating for you, because you've seen it here. You can go from, this is just your score, from 780 to 540, and it stays on your score. Yeah, if you want to speak, just request. We're going to be done in about 2 slides, and then we'll just take questions. Yeah. So it stays on your score. So you don't want to have it on your score. But it's not even the bad part. If your score gets affected, you can still recover. Somebody will say, okay, I've already bought the house. I was late. My score went down. Who cares? I've already bought the house. I hear you. But how long does it take you to recover from these events? Again, let's go to our guy that had his credit scoring of 780, right? Let's assume this guy was bankrupt. So his score was 780. And of course, he became bankrupt. So the score went down from 780 to about, what number was that? To about 540. So it went from 780 to 540. But what's the real issue with this is that it will stay on your report for 7 to 10 years. So just imagine that you're in a country where you cannot get significant credit from 7 to 10 years because you were bankrupt, and it's going to be in your report. That's what this is basically saying. So that's not good, right? What if you were 90 days late on your mortgage? It stays on your report for 7 years. 90 days late on your mortgage. 30 days late, it stays on your report for 3 years. Short still stays on your report for 7 years. The point is this, right? These guys keep records. So if you are late, what you are doing is that you are putting things in your record, which we call negative impact on your report. This is what the guys look at to give you a mortgage. So let's say you came to America and you were single, or you came to Canada and you were single, and then you got a car and you were 90 days late on your car. It's on your report. It's going to be there for 7 years. Then you got married and you want to apply for a mortgage, and you and your wife apply together. This is going to show up, and this would affect the total AP how you're going to get on that mortgage, because you have a negative. She might not have a negative, but you have a negative. It's going to show up. They're going to ask you about it. So again, you can't avoid these things. This is record keeping, and this is how they operate over there. So this is just to let you know, apart from how you get the credit scoring, you don't want to be in a situation where you have a bad score, because it would affect you, right? It would affect you. Guys, I think this is going to be our last slide, and then we'll take those questions. Today's Super Bowl weekend, so hey, let's go do that. So what should we then do? You know, I like acronyms, so I have an acronym here: PRAM, PRAM. Patience. You've got to have patience. So essentially, if you have bad credit, be patient. Don't go apply for new credit, because the more you apply, the more they see that bad credit, the more it dings you because you're doing an inquiry. So if you've done something bad, don't go and apply for new credit. Just give it time to wash away. You can see we have the 7 years. Just give it time. Let it wash away. Yeah. Pay your bills. Pay your bills on time. Do all that good stuff, but try not to go apply for new credit, right? Number 2, reduce your debt to income. We didn't talk a lot about debt to income. Debt to income is what we call that, reducing your carry over to next month. Your debt to income is a key thing that they use to also make you lose, to see if they're going to give you credit, right? How much income do you have versus the debt you have? This is where the quote unquote minorities get tripped up, because you might have good income, but if you have a lot of debt, then your DTI is low. You don't qualify. When you want to buy a house, they look at not just your income, but the income to your debt. So if you make $1 million, that's fine. But if your debts are 800,000, it dings you more than someone that's making just 200,000 a month. You have a very, very low DTI, debt to income. The person that's any lower than you has a higher DTI than yourself. So bring down your debt to income, reduce the debt overhang that you're carrying. And it's those small personal loans that they don't like. Those small personal loans you take here and there. Because in America, they write you letters all the time. Take this loan, take that loan, take this loan. All those small loans you take, not really impactful, right? Absolutely no new inquiries. It's good. It's the same as patience. Don't go and say, "Oh, I want to get a car hire. They're offering me a loan. If I take a car hire, I'll apply for that card." No, you go to say a departmental store. If you get a store card, you can get groceries cheaper. No, all those inquiries are going to show up. You have to be patient. Number 1. Because you've got bad stuff going on. If you've got one credit card, fine, survive with that one credit card. That reduces your DTI as well, because potentially you can get new debt. But you've got to really slow down what you're doing, and of course then move forward, right? And the last one, of course, is called monitor. You've got to monitor your credit scoring. Make sure you are not getting any new impact into your report that you're not aware of, because you want to take care of that, right? Let's go back into the next one on monitor. I just want to show you guys this. It's going to be the second to last slide, right? The law in America says that you have a credit. You are given your credit report for free once a year. So if you look at this, guys, this is called annual credit report. You can copy this name. So every year, this is America, not about Canada or the UK. Every year in America, by law, you are to get you can request for your credit report, and you get it for free. And like I said, there are 4 credit report bureaus, and the 4th one, the name escapes me. So you can go to Experian in January and ask for a credit report. You can go to TransUnion, also ask for a credit report. Equifax also ask for a credit report. Most banks now will give you a credit report on the banking app every month. So you don't have to go to here. Every month they'll give you a credit report. Why do you want that report? The report shows what people are reporting about you, the negative effects, the inquiries. Is going to show up in your report. So what are you looking for in that report? You are looking for anything you did not do, or anything that is there that's going to harm you. Because when you see someone that's going to harm you, you have the right to then report to the bureau. And those guys they are mandated by law to remove in a certain amount of time. So you want to always look at your report. And I've given you a sample of a report on the screen right here. So when you look at your report, make sure you look at those negative items. Negative items, very, very important. Look at negative items. That's where you're going to see the bankruptcies. Look at your credit inquiries. That shows you where you have pulled credit. So what if you just sit at home? You see that you are pulling credit to buy a house in Wisconsin. You've never been to Wisconsin. That means someone has got your data and is trying to create a mortgage for you in Wisconsin. You guys know that song, I Want to Wake Up in a Bugatti. That's the real crime story where there was a quote unquote our son. Our son was in America, and what he was doing was taking people's identity and applying for credit. In this case, homeowners lines of credit. So you have a house, you own your title, but you don't check your credit score. He will basically go online, create you. He has your name, he has your date of birth, he has all that, and then he creates you. Then he applies for credit in your name to a bank. But the bank will look at you. Oh, you've got a house. Your house is worth $1 million. You want 500,000, no problem. The bank will give you a loan for 500,000. But the loan goes to him, not to you. You are just there playing golf. Your house has been sold in the market. Then when you don't pay, the bank comes to you and says, hey, you took a loan. You said, I didn't take any loan. The bank says, this is you signed this, I didn't sign it. But if you had looked at your credit report every month, you would have seen the inquiry that the bank had done an inquiry on your credit report, which you didn't do. Then you can easily call the bank. Also, if you don't pay and the bank, maybe the bank are trying to reach you through that fake address that the fraudster gave, you didn't pay for 5 years. So the bank will put your house up for collection. It goes to your report. It's now a negative report in your credit score. Maybe you are in some other country, nowhere. So imagine you have a negative report. You have been reported bankrupt. The bank has declared that you can't pay, so that house is for foreclosure because you just didn't look at your credit report. This is not your score. This is your report. You've got to pull that report at least once a month and glance, especially those negative items, especially the credit inquiries. If you start to see a credit inquiry you did not do, immediately dispute. If you allow it to sit, that means you saw it. The law says they give you a statement after about 60 days. You've said it's true. So very, very important that you do that. All right, folks, so we'll take questions now. If you guys have those questions, and then of course we'll just let me take it back here. So so if you guys have questions, we'll spend about an hour. I just want to make sure I record this so that way I have it on video and on text. I know most of you guys are going to be busy today because of Super Bowl weekend, so you can go back in and of course read this if you can. But I'm just going to read a few questions here on the DM. Yes, I've read this one about, like I said, if you have a car, if you have money to buy something, see if you can pay 95%, even 98%, right, on that loan, and then just take that as a loan because that helps your credit score. If you're at 850, no need, right? If you're at 850, because you're already should we say, at that good level, so no need for that. Someone says, I pay my phone bills every month. Does that go to my credit scoring? No. It has to be a loan. There are now, I think there's now legislation, or the credit bureaus are trying to get some utility bill payments to show up, right? To show up as a credit report. But for now, no. If you simply pay your bills, it doesn't show up as a credit. It's got to be a credit to show up on your credit report. So your phone bills are not going to show up. There's a way, yes, so correct. So most of these apps, like the Experian, most of the credit bureaus, there's a way you can report your bills to them and you can build credit with them. But that's a program that they do. I don't want to talk about their own program on the show because that's specific to them. But overall, it's got to be a loan for you to then have that credit report. So the name is credit report, not bill report. So if you simply pay your rent on time, you don't get a credit scoring. Okay, so I like this question again. Someone's asking, just walk me through. I want to buy a house. I'm in Canada. I want to buy a house you want to buy a house. What credit score do I need and all that? It all depends, right? There is no specific number that will say, if you have this credit score, we'll give you a house. It has to do with your your financial capacity to pay back that mortgage. So remember when I was going through the slide, I said debt to income and your income. They would look at the income you are making. They will remove your living expenses. Whatever income is left over is what they're going to consider to say, can you pay your mortgage with this? So your credit score, all it does is give you access to lower rates. And we'll give you the reason why you want lower rates. But your credit scoring does not guarantee that you get that home if your income cannot afford that home. So you see what I'm saying? So it's still going to be a function of your credit scoring and your debt to income. But if you have good income and bad credit, you will get the loan, all things being equal, but at a very, very high interest rate. That's the point we're trying to make, right? So both of them are very, very important. If you want to get a home in Canada, start to build your credit score. And if Canada, start to build your credit scoring, follow the same rules. It's the same on all the West. Get your credit score up, get your debt to income low. If you want to have more income with a higher credit score, that's how you essentially get it. Yeah, I added you, Yemi, but you keep on following up. So I've added you again. If you want to speak, just let me see. I've sent you a request again. Just request to speak and you can speak on the space. Yeah, lots of great questions here. Yeah. So, yes. Okay. So let's just to explain the issue about the two of you, right? If you apply for a mortgage together with someone, then both of you are going to be looked at as a borrower, right? So if you are applying for a loan with somebody, then two of you are going to be looked at as the borrower. So if you have a negative impact on your score, then of course that negative impact is then going to be looked at. It doesn't mean I can't say they're going to tell you yes or no, but they are going to answer you. You're going to ask you that question. Why were you late on a mortgage? All that kind of stuff. That's what I'm going to ask you. So there's no one can sit here and tell you we're going to deny you or give you credit, but we're giving you how they mark your script. What we're giving you here is how that credit script will be marked so that you then walk to the answer and get that. Yeah? Okay, fantastic. And I saw one here about a student. I'm trying to find it. Great question from a student. Okay, can you explain authorized credits? Can you explain on the same guy? Can you explain authorized credits? So authorized credit means if I have a credit card, right, I can add an authorized user to my credit card. Most times I say maybe kids want to go abroad for a holiday or want to travel for school holiday. The parent will take the kid to the bank, or the parent will say, I want to give this kid my credit card. It's the same credit card, but I want this kid to have this same credit card that's going to come to my account just in case he runs out of money when he's in America, right? When he's in Paris or whatever. So what then happens is that they will give the parent a card that's attached to the father's card. Now, if the bank says, so every time the kid uses that card, he has his own credit scoring also coming to him, because the credit report will show that this son used that credit, or the father used the credit, and the son is also getting the credit scoring applied to him. You see? So the authorized card allows the child, or whoever the authorized user is, to benefit from the credit report of the main user. So it's not a new card, it's the same card, but because you are using that card, you also get the rewards. I've got Chi, God's first daughter. How are you?
I'm doing great. Good morning.
Fantastic.
Yeah, I always listen to your space. Interesting.
Thank you, ma'am.
I want to ask this question. If now maybe I want to start a business, like let me say shipping cars to Nigeria, what kind of do you advise me to start up? Currently, I use US Bank for my credit card and Capital One. So, what kind of credit do you?
I wouldn't put that on a credit card, though. You know why? Because credit cards are due 30 days. But if you ship that car to Nigeria, it's going to be more than 30 days. So you're going to pay a balance on that card after 30 days. You see what I'm saying?
Yeah.
Yeah, because if you go buy the cars, anything you want to put on your credit card to get the best impact, you want to pay that thing off in 30 days or less. Because if you put that card on your credit card, then you can't pay back in 30 days. You're going to pay that fee, and that fee is going to wipe up the profits you might make in Nigeria.
Okay, now, what if, the credit card I'm using, I always apply for zero APR. Yes. What if I'm using a zero APR? Like, sometimes they give me like a year, like the one I'm using.
Oh, fantastic.
Yes, I have up to 12 months zero APR.
Fantastic.
But I'm not using those credit cards. I really want to use those credit cards. Like, I want to apply another one. They have 24 months. Yeah, so I can use that for it.
Yes,
okay?
Yes, you can. So those cards are basically saying that when you spend, you will not pay interest, you only pay the principal. So technically, yes, you can. If you're going to, if the vendor will allow you pay for the car with a credit card, that means you put a balance on your credit card, then you can pay that balance off in the 24 months. Fantastic. That means you can do that business and clean up that card within 24 months. Fantastic. If you have that option, that's like a 0% personal loan. That might make sense.
Okay, thank you. And the last question is, I said I use US Bank and Capital One. Do you recommend any other bank that is more? I heard that American Bank is okay. So do you recommend any bank?
It doesn't matter the bank name. It's just the APR really that matters. And like you said, the terms. Just go online and just put the best credit cards for 0% APR. It doesn't matter who's giving you the card, even if it's whatever bank. Can they give you a longer term, like where you want a longer term, right? And a lower APR. That's what you're looking for. The APR only kicks in at the end of the term. So whether it's Capital One, whether it's a credit union, go to credit unions as well. If you get a longer repayment period, that's what you want to do. Longer, yeah.
Thank you very much. I appreciate it.
Yeah, you're welcome, Chi. Have a good one. Yeah, so those are great questions. Yeah. And so this gentleman is asking, let me see. Yep. So what if so we're back to this home ownership. There is no score. I would say that the score you want to get before you start to look for a loan is at least 700 to buy a house, at least 700. But your credit score is not saying that once you get 700 or once you get 800, you can get a house. It basically says that you are a very, very good borrower. That's what a credit scoring means. So it just basically means, hey, if you have a high credit score, you are a good borrower, so we can lend you money and you will pay back. But there's no score to say. What I will say is this: if you have a low credit score, you might not get the loan. But if you have a high credit score, you're able to get that loan better. Hey, Mekti, how you doing?
Yeah, I'm fine.
Okay.
Always a pleasure to be here.
Yes, sir.
Yeah, I'm with my pen and paper, so it's always a lecture.
I hope you've taken some notes already. Very, very important. I know many folks are watching the game.
Notes already.
Fantastic. You got a question?
Yeah, so I'm in the Three Lions country. So if I want to, this not on, I don't know if this is related to credit card, but if I want a quick money that I want to used to do one or two things and pay back quickly. Is it better I go for a credit card, or is it okay? How will you advise me, like a financial product I can access?
So look, tell me what you want to do. You want to borrow money. Give me to be specific so I can give you a specific answer.
Okay, let's say like what she said. Say you want to move something to Nigeria. You know, you want to ship some things to Nigeria, like car parts.
Yeah.
Yeah. So, and it's something there are already buyers waiting in Lagos, and you know they've already just bring the consignment and they will just remit the money. So you need fund to push that in order for them to. So it's a short time, it's a quick stuff. So is it possible to, as in, do I use credit card, or is there any financial product I can quickly access to do that and repay?
Okay, the only reason why we're even considering credit cards is that many credit cards give you 0% APR for a period of time. So first of all, credit cards are the most expensive form of credit in anywhere in the world. They are the most expensive. But in America, I know you can get a credit card that will give you zero interest for 12 months, 21 months, 24 months. That's what she's talking about. So whatever you are doing with that credit card, you have to have the ability to clean it up after the period. Otherwise, you're in big trouble. That credit card can bankrupt you because it's the most expensive form of credit in America. So look at what I advise. If you own your own home, try and get what we call the home equity line of credit. I know they call it in the UK. I.e., get a second mortgage, like a line of. Do they have that in the UK? They should have that, right? Where you can take a second line and they give you the cash, but you don't pay interest till you use that line. They have it in the UK, Abi Menkiti.
Yeah, I think they do. I don't. I will still double check.
Okay, so now when you have that, if you have that home equity line of credit, that's going to be your cleanup fund. Then if you have a credit card that pays you 0% interest, then you can use that credit card to do what you're doing. Because let's say she ships that good from Houston to Lagos, takes about 3 months or so to get to Lagos, maybe 1 month to sell, she cleans up, that's within 6 months, Abi. The loan is for 0% for 12 months. So she can use that credit card, clean up, pay back the credit card. You know the funny thing, the bank will increase that loan for her. So if she can clean up that transaction, the bank will tell her, hey, we're going to give you a bigger credit card at 0%. So she's onto something. But I caveat again, she's got to make sure that she can clean that credit card up at the expiration of that grace period. Otherwise, it's going to bankrupt her. Now, why are we doing a home equity line of credit? If you have the credit card, let's say you ship those goods to Nigeria and then there is NLC strike. All the ports are closed. So the car is there, you can't clear it, then your credit card is due. No, credit cards, if you simply pay 2% or let us say 5% of the credit card, you've paid for the month. You don't have to pay back the whole 100%. So that means you can then take money from your line of credit, your home equity line of credit. It has a higher interest rate than your credit card, but you can pay the minimum on that credit card. So you buy yourself 30 more days. So the home equity line of credit is going to be your ultimate insurance policy. You use your credit card to do that transaction because it's 0%. Then you use your home equity line of credit to clean up the credit card if there's any problem. Because yes, you pay a higher rate than your credit card, but the home equity lines is going to be your lowest form of credit. Lowest credit rate because it's a secured loan against a very property that can be sold tomorrow. So that's how I would do it. I'll get my home equity line of credit, then get the credit card, 0%, use the credit card and run that business, and then I use my home equity line of credit as my insurance. That's what I'll do.
All right. Thank you very much. Thank you.
Hey, fantastic. Yeah, good. Great questions again. Yeah, great questions again. Yeah, again. Yeah, just like I explained to Menkitan lady, you only want to use that card if it is 0% and if it has a long repayment period. 3 months is not long. If you are doing 3 months, don't export to Nigeria with 3 months. Anything can happen. The ship can get docked. Anything can happen. So you want to have, most banks will give you maybe a year. With a year, it's possible. But remember, whatever you are buying has got to be able to be put on a credit card. So some vendors will not allow you put stuff on a credit card. I know a lady in the US that bought a car with a credit card that was 21 months 0% interest rate. She went to the car company and told them, I want to pay for the car, but I have a card. I don't think she told them it was a credit card. And they told her, yeah, we'll take a card. And she came back and they said, oh, it's a credit card, we can't take it. But I said, you guys already promised that you use a card or something like that. And they allowed her to run the card. So she paid cash and credit card. So the balance she put on the credit card is 0% for like 21 months. That's what she did. So she's going to pay her auto loan, but the card the card that she bought and put on the credit card is 0%. It's like a personal loan that she got for 0%. Again, she's paying it down every month, but no interest. You only do that when you have the means to pay down. Don't use credit card to do a business. Don't use credit card to start a business. Your credit card is what we call working capital. So you have a business, and your business, maybe you sell water bottles, and you want to pay for nylon paper. Yes, use your credit card. You pay for nylon paper, and then your turnaround time, the companies pay you, and then you clean up your credit card. Yes. So another great question here. What about a business credit card? Can I use a business credit card for this as well? I.e. to buy a house. Well, remember that the business is different from you. In America, the business is a person, like a human being. It's an entity on itself. That's why when you open up a business account in America, you sign what's called a beneficial owner. Who is the beneficial owner of the business? You sign that. That shows you are the human being behind the business, right? So when you have a business, it's hard to say this business is buying a personal home because it's not the same person. That business income, the bank will consider it as income to you. But the business itself can't buy a house. It can't be applying for a mortgage. But the income you get from the business, the bank will take that in as income to you. Yeah. So, okay. So you're asking if you can use a business credit card. Of course you can. You can use a business credit card to do the same business. As a matter of fact, guys, if you have a business, try to get a business credit card separate from your personal credit card, and also try to build the business history and the business transactions on that business credit card as separate from your own individual credit card. Very, very important. If you can build two of them, because the business has its own credit history and you have your own credit history. The idea is to try to keep on doing transactions so that the credit card allowance is basically up and up and up and up, right? You want to get that credit card money allowance up and up and up. Yeah. So yeah. Great, guys. Fantastic question. I can't read all of them. So, and we have, how long do we have to stay here? Yeah. So Nigeria has credit cards. Yes, Nigeria has credit cards. Nigeria has got credit bureaus. I listed 3 of them. It's still on the screen. Nigeria has got credit registrar. Nigeria has got the names are: number 1, credit registrar. That's a company. Number 2, CRC Credit Bureau. That's a company. Then there's First Central Credit Bureau. So we have 3 as of today that I know of in Nigeria. Yes, so when you want to take a loan, they also use this same framework that I've given to you. They track how you are repaying, and they're able to then advise vendors. When vendors want to pull your credit, they'll go to one of these guys and they also pull your credit. So yes, Nigeria has. I'm surprised you're asking that. Nigeria has credit card. What I use it. Nigeria had I know EcoBank 2003 had a credit card. EcoBank, and I had it, and I used to use it for stock trading, which was a very, very bad idea. So you should never do that. Learn from my mistake. Never do that, right? Because back then in Nigeria, you could buy the stock. You could buy the stock when they issue a bonus. When they issue a bonus, the stock price goes down. Then you buy it. It's like psychology. You buy it, right? And the market thinks that the stock price is cheap. It's not cheap. It simply went down because of a bonus. So you buy the bonus, you sell the bonus, then you use your bonus shares to cover up. Long story. But what then happened? That they started to delay the certificates. And if you don't get back then, we use certificates. If you don't get your certificate, you can't verify the certificate. You can't sell. So that whole deal now failed because you borrow money. It's like a short sale which you cover with your certificates. But once it's set to delay certificate, the whole deal went off. So don't use stocks. Don't use your credit card to do stock trading. Please don't. Yeah. Please don't. Yeah. So Nigeria has. I don't know. I don't know now. If you guys do Nigeria have credit? I don't. Do they have credit cards now? Like consumer credit cards? Do we have? I don't use. I don't use. So I'm just asking. Yeah. Okay. Fantastic. Okay. Phone bills. Let me just read. Phone bills and utilities do show in some EU countries like the UK. So someone is telling me this is from is saying that your phone bills and your utilities show in the UK. That's interesting. Yeah, I didn't know that. Yeah. So essentially, if you have a phone bill, it shows in the UK. Fantastic. I didn't know that. That's good for you guys. I know in the US it doesn't, but you can go to the credit bureau. I know Experian has that, and you can tell the credit bureau that you want to pay you want to have some bills show up in your report, and they can try to do that for you. Yeah, I know that. So always find out. I'm just going to give you the broad strokes. Hey, did I get them say that name right? Stratif.
Hey, yeah, Stratifedi.
Jesus, man, you guys don't have simple names, man.
Hi.
How you doing?
I'm fine. Sorry, the name Stratifedi is just a brand. My name is Prosper.
Oh, Prosper, how you doing? Good.
I'm fine, yeah.
What's on your mind?
I just saw the title of the things, how to raise your credit score, and this is something I've done also in my course in life, and I'm working also for insurance companies and banks. So I just said, let me listen to it and see how you guys are trying to implement this in the case of Africa, and I would be interested to know because everything concerning Africa concerns me, and I want to know.
Okay, so have you been able to pick up a few points on how you can raise your credit scoring?
Let me say first that when I was doing my master, and I had to do a project on it because there's a packet on R. R is like a data science language like Python, which is used also to analyze data. And I work on some project on how to actually optimize the credit score. And what I will say is that what one as a person can optimize in this case is how will I put it? Is the borrow money? Is the money you borrow from the bank? But so you first have to pardon my English because I'm basically a Frenchman and living in Germany. So I went through Nigeria during my courses, spent something like 2 years. That's why my English might not be perfect.
That's fine.
Yeah. So what I was saying is that personally, as a person, what you have to be careful on it is what you borrow from the bank. If you borrow money from the bank, you have to make sure you also pay back on the time the bank has given you to pay. That is very, very, very important. And the second things that the bank also want to see is actually how you spend your earning. If you receive, let's say, like in case of Nigeria, you receive like 100,000 naira a month. The bank want to see that you have some tradition, some culture, that when you receive your money, you almost always keep like 1/4 of your money in one account called the Sparbank, where the saving account. It's very important also for the bank to see that you are also constructive, you are very diligent with your money, you know how to manage your money. This can also optimize your things. And then everything like marital status, one can always discuss, and if you have property, one can always discuss. And in the case of Germany, like where I studied, I did my master before I left. One thing which was also very, very important was like what actually, and I am sorry to mention it, but I saw it also on the data, it was your race. So if you already live in Germany and you are a black person and you are like coming from Africa country, your race is something the bank will also look at. But
Really?
when they look at your race, sorry?
They look at your race in Germany?
Yeah, the data. There's one data set called the German credit data set.
Wow.
So I was also shocked. But this can be mitigated, because if actually you are like a black person, and let's say in the case of let's say I will take Lagos. If you are in Lagos and you are living in Akonjo local government,
This guy.
and then another person is living in Ireland, the person that is living in Akonjo local government will be like depreciated, but the person who is living in Ireland will like be appreciated. So when you now compare these two magma, these two qualifications, these two magma is a German word, but let me say these two quality, like you are living in the big city, the city where people that are rich are living, and you are a black man. So it mitigates this race. You understand?
Yeah. That's interesting. In the US, we have specific laws that forbid you being targeted according to your race, your religion, your ethnic background, and all that. So you can lose your banking license if they can prove that you are lending for mortgages based on those factors. We used to have redlining before, where black people, right? The banks would put you in a location and redline it and say, we're not going to give loans in that red line. Now, the banks in the US have got to publish a report to show who applied for loans, mortgage loans, and who they gave mortgage loans to in that community where they are doing business. So they have to be very... literally, when you apply for a loan in America, they will ask you your ethnicity and your race. They would ask you for it because they have to report that so and so, quote unquote, black people applied for a loan and we gave those loans to this quarter. So they track it. So you can't hide and say, oh, I didn't know he was a black person. No, they want you to know he was a minority, and they want you to know that, okay, you are in that community. How much loans have you given to that community? Very important. So I'm surprised you say Germany doesn't do that. I think Strap has gone off. Oxley, Strap, thank you very much. I appreciate the comments, and I thank you. I think you pronounce Akonjo very well. That means you lived here for quite a while. Really appreciate those comments. Hey, Oxley, how are you doing? Oxley Tech. Also, take us home. We're going to be done in about 11. We're going to be done in about 8:30. So we can go watch the Super Bowl. Oxley, what's on your mind? Oxley Tech.
Yeah. Carlos, thank you for yet again another interesting topic. Well, maybe I can look at it from the Nigerian perspective as much as I know and as much as I have the information. Do we have credit score in Nigeria?
Yeah, we do. I just quoted the three companies where we have credit scores in Nigeria. Yeah.
Yes, but is it actually consequential? I don't think so. So I know that there was a regulation that the CBN passed on the CBN issue, I think some few years ago, that established those credit rating or credit scoring agency, credit bureau, as they are called. So there are a couple of them. They try to. So I think they are more, data collection agency or data collection companies. I don't think that most of the data or things that they have about consumers are actually consequential. Consequential in the sense that a database that maybe that can be referenced when a transaction decision is being made of a particular consumer. I don't think so. So, and what are the transaction decisions when you come in front of a bank to finance a consumer credit, or maybe you want to change your electronics in your house, you want to buy a new car, you know, and you are in front of a bank trying to make those applications. Do they reference those data? I don't think so. But it's a big no, they don't. So that's why I said it's not yet consequential. Maybe it might still be consequential in the future, but for now, I don't think it is. But I also want to mention, probably because, would I say that the CBN has not been very supportive? Yes, they are the ones that brought out the regulation establishing those agencies. Have they been supportive of those agencies? Not as much as they should, because if you want the credit agencies or the credit bureau to be consequential, you just to write a regulation to say you insert them. You insert those agencies in the middle of transactions, in the middle of everyday transaction decisions. So CBN has not done that, and that's why those whatever data that those guys have don't really matter. They don't count. In fact, the only thing I know that counts, that is very consequential that the CBN has done, is what they call the GSI, the Global Standard Instruction, where you are an individual or you are a corporate, you took a loan from Bank A, and that loan you didn't do well, or you're not paying down that loan. The bank B, anybody can recover any credit balance you have in the industry. So in other words, you took a loan from, let's say, Access Bank, you went to another bank and you have credit all over the place. You have credit balance in three or four banks. Access Bank can wake up one morning and place, it's a click of a button, and all your credit balances you have that is tied to your BVL or ultimate beneficiary owners of.
Okay, actually, your audio is kind of broken, so I'm not really sure. I don't know. Could you guys hear him that well? Oxley, I get the point you're making. Yeah, we have, but it's not really. Is it really? Do we use it real time? That's a good point you're making. I don't know how it works. Maybe someone that has used credit in Nigeria can say, oh, when I went to apply for a loan in Nigeria, they ran my credit and they gave me a report. Maybe someone can come up and say that. I haven't used credit in Nigeria for a while, so unless someone can come and say that, that would help. Ifrex, I'm not sure. Ifrex, how you doing?
Yeah, good evening. I'm fine.
Okay, what's happening, man?
There's no problem.
Okay.
You're just okay.
Fantastic.
How are you?
I'm doing very well, sir.
Oh, yeah. There's this question I want to ask. I don't know if we're talking about loan, and I don't know if, let's say, someone is loaning money from microfinance banks. If it is, let's say, your credit score on microfinance bank, if it is attributed to that of the commercial banks, like if your credit score is low on the microfinance bank, is it also attributed to commercial banks? Don't know if my question is.
Yeah, it's just somehow it's the same credit score that you have that all vendors would use. You only have one credit score. So if you have that one credit score, then you would do the same thing. Yeah. Mm-hmm.
Okay.
Yeah, it's one credit score for you per person. So if you go to a microfinance bank, a community bank, yeah, then exactly that's what they're gonna pull. Correct. Yeah. All right, fantastic, man. Thanks for calling. Appreciate you. All right, folks. Thank you so much for hanging out with me. Ifrex. All right, thank you so much, guys, for hanging out with us today. We spent around an hour, 30 minutes just talking around credit. And again, I made sure to record this because so many of you are going to be watching the Super Bowl or watching the soccer game. So I wanted you guys to have this. This is a very, very important topic, right? I'm tying this month in America is the Black History Month in America. And Black history, I look at the economic history. If you look at the demographics in America that are economically viable, you're going to see the Caucasians, you're going to see the Latinos, you're going to see the Black population. If you look at home ownership you're going to see the same demographic. Number one is Caucasians. Number two are the Latinos. The last is going to be the African Americans and all that. Why? There's a pathway to home ownership and to economic security in America. That's the pathway. Once you own a home, you have equity. The home is yours. You build equity, and a home is the best way to transfer wealth from one generation to another generation. If you own a home and you pass away, your kids get that home. It's theirs. They can live in it. They don't have to pay rent. They can sell it, which means they've got cash they can then use to start a business or to go to school. But that generational transfer of wealth is what has empowered many demographics. So you now ask the question, why don't many blacks own homes in America, even though they've lived in America for centuries, right? Because of credit. Homes in America are given based on credit. You've got to have credit to get a home. So why don't they have good credit? Because they don't understand how credit works. Once you understand how credit works, it's then easier for you to then apply for a mortgage. You don't have to go and get a mansion. Even if it's a flat, that equity is yours. In America, once the home value appreciates, the equity is yours. We're not talking about if a mortgage is a loan or if a mortgage is a good investment. The point is, in America, the pathway to wealth is via home ownership. And home ownership comes with getting a good credit score to afford that home. So this is a very, very important topic that you've got to understand how credit works. And the sad part is that good credit is a very, very simple concept. Number one, you get a credit. It can be a credit card, it can be an auto loan, it can be a home loan. That's number one thing you want to do. Number two, you pay it on time. So you pay the interest due on time. Once you pay interest due on time, you have met 35% of that obligation. Number three, you keep your balances low. So if you have a credit card and it's for $1,000, you don't want to carry over more than $300 or 30%. That gives you 30% of your score. So simply paying on time and not carrying over a balance, you've already earned 65% of the available score towards the credit. If you mix your credit up, you get a further 10%. The length of time gives you a further 10%. So it's really not the hard thing to do. Get a credit card, pay on time. End of story. And you're able to build your credit history. With your credit history and with lack of debt, you can then afford a household that you can then use to get onto that equity journey in America, and you can then essentially get yourself into that American dream. That's why this is a very, very important space, especially in the weekend of the Black History Month and all that. It's the same with Nigeria. If you own your home in Nigeria, you have the equity, you no longer pay rent. We might not have the credit scoring, but this also helps you in case you'd like to build up that credit. This also helps you. So I'm going to take Izzy, why are you coming late? Izzy, Tinzi.
I have a quick question.
Yeah, Tinzi, go ahead. You guys are coming late. Yeah, what's up?
Yeah. So I have a friend who has a friend. They both live in Canada. So this particular friend has a bad credit score and he wanted to buy a car. So this my other friend has a good credit score. So the car company advised my second friend to be like a guarantor.
Yeah.
Which he did. Now he bought the car. So his question now is, now that he's a guarantor to his friend, is there a problem with that in terms of affecting his credit score going forward, even though the friend keep paying on time and he also keep paying his own credit on time? That's his first question. Then the second question is there a problem if you have a credit score and then you have money, you don't use the credit score, you just spend your money instead of using your credit card going forward? Thank you.
Yeah, two great questions. Number one, if you guarantee a loan and you are put on the loan, then you are liable for that loan. If your friend pays the loan, then you get the benefits of the loan, i.e. you get a good credit score. If your friend does not pay the loan, you are liable to pay the loan back because it's a joint loan. So if your friend does not pay, they're going to come to you to pay. It's a consequence loan. You're going to pay if your parents not pay. But so if you get the good, you get the bad in terms of that. So that answers your friend's question. The second question is to say, what if I have $1 million and I don't need credit? Would it affect me in any way? No. If you have the money to keep on paying cash, then you don't worry about credit. I mean, I'm sure if you pull Elon Musk's credit or Bill Gates' credit, it's very, very bad because maybe they don't borrow, right? So I'm just making a point. If you are an average person, a normal person, in quotes unquote, you need good credit. So I will say, like I said, if you have money to buy a car, the car is $10,000. Give them $9,500. Finance $500, so it goes into the loan. It helps your credit scoring. It doesn't hurt you, right? But if you think you've got enough money, you're not ever going to take a loan, fantastic. Just go and pay the cash. It wouldn't affect you in any way. But if you think you need a loan down the line, I would say always have a good credit score and keep it up there. You never know. Anything can happen to you, and you might go from a billionaire to a normal guy. So you want to make sure that you have good credit. Yeah? Does that answer your question, Cinzia?
Yes, thank you so much. Thanks, Carlo, for what you do on this. Thank you so much.
Really appreciate you. Thank you so much. Yeah. Ese, how you doing? Long time.
Yeah, Carlo, I'm fine. How are you?
I'm doing very well, sir. What's happening?
Good. I just want to throw this up since we're in Black History Month and we are talking about generational wealth. I want you to talk a bit about adding your child to your credit card, even if it's a newborn baby, like literally, even if the child was born today. I know there are pros and cons to it. I want to talk about it so that people here will learn. I've seen it across the world, from Europe to America, white people specifically, let me say that, setting their children up from childhood, that when they get to adulthood, so when they get to age 18, because they've already had some savings for them, either a 529 or in some form of saving, or they give them a gift. So you see a child buying a house at the age of 18. Then you wonder, how do you get the credit? Yes, your grandmother is always giving them, so their grandmother has already given them the balance, like the down payment for the house.
Yeah.
Right? But because as a child, their parents meticulously built their credit alongside their children's, they were in a good position to buy that house.
Understood.
At a good rate. So I want you to talk about it, the pros and cons, and for people to know, in case you don't know, that you can actually add your child to your credit card, no matter how, even if the child is 1 day old. So kind of that's what I came up to say. Thank you.
I hear you on that. Let's break it down. So generational wealth is really when you compound wealth. When you compound wealth, that's generational wealth. What does compounding mean? Interest on interest. So if you look at Nigeria, it's very hard. Look at Nigeria from not 1960, from 1800. How many compounded wealth can you find in Nigeria from, say, 1900, start of the 19th century? How many can you find till today? How many? Where the grandfather was extremely wealthy, the father was extremely wealthy, and the grandson is extremely wealthy. How many can you find? I don't want to go above my pay grade, but I think you will not find any. I know of one or two in my head, but you will not find any generationally compounded wealth in Nigeria. You will find 2 generations, but 3, 4, you struggle. Rockefeller, Ford, their foundations are in Nigeria today. When did they die? Rockefeller Foundation, Ford Foundation, they're in Nigeria today, so curing malaria. Today, DuPont is a family. DuPont is a family. Generational wealth. Even Bill Gates, he has done his foundation. It's going to be around forever and ever because it's a foundation, right? So how many do we have in Nigeria? So that's what you're talking about, is it Chikuda? We have to have in Africa, Nigeria, generational wealth. So it goes to your specific question. How do the Oyibo do it over there? They set up a structure using the legal systems to say, I will pass wealth from myself to my dependents without paying taxes. So the taxes don't dissipate that income. It goes from myself to my grandson and all that. And the laws are there. If you have in America, I think you can give about 13 to 15 billion as a gift in your lifetime. and the government will not tax it. If you pass away, your wife gets all your assets tax-free, and your wife can give gifts in her lifetime up to 15 million or so. Again, that's on the side. Your specific question is asking about how can the average person do generational wealth transfer. Credit cards are tricky. I don't think you can really give a credit card to a baby. Yes, you can give a credit card to a teenager. I see many kids here that want to go to Paris for school excursion, and their parents will give them a credit card. They are 15, 16-year-old. That card is the parent's own credit card. The kid has a card that he can use and all that. What I would advise you to do is to open up what we call an IRA, individual retirement account. Specifically, I will go as far as saying open up a Roth IRA. Roth is spelled R-O-T-H. Open up in an R-O-T-H IRA for your child. When the child is a baby, if you have a business, take a picture of the baby and print calendar. That baby is a model in your business. So you pay the child, your own child, a paycheck or a contract. You have to write a real contract. Don't just give the money into the child and say, it's my son. No. The IRS wants the child to earn what we call earned income, not gift. You can't put a gift in an IRA. Earned income. So the child will, that baby you took a picture of and use that baby's picture as your company logo for that year, will earn modeling contract. So you pay the model $10,000. You take that $10,000 and you put in his Roth IRA. That money will stay there until that child gets a job. And that child can, after 5 years, the cash is for the child. He can take that money out tax-free after 5 years. So imagine a kid is a baby. After 5 years, the money is owned by the kid 100%. The child, you can contribute as long as she wants, earned income. The child can inherit that IRA and can keep on contributing for the rest of his life till he takes the money out, tax-free. So if you buy something worth $1 and the good becomes worth $1 million, the child can withdraw $1 million tax-free because it's a Roth IRA after that 5 years. So that's how you want to transfer. That's a simple way you can do it. And right now, they made it easier for you guys. They made it easier for you if you live in America. I think I shared that out to Americans. There's something called a 4547 account. It's called a Trump account. It's even like this. So you can Google it. It's a Trump account or a 4547 account. What they've done is this. In America today, you can open up that account. If you are filing taxes today, let me get exactly. If you live in America and you are filing taxes today, you can simply tell your accountant that you want them to open up that. It is called a 4547 account. You simply just add, it's just a sheet of paper. You add that into your account. You put your kids' names, your socials into that tax return, and you file it. So what you've opened up is an account for a child. And that account, anybody can contribute. So they've taken that IRA concept, they've created this new 4547 accounts called Trump accounts. The parents can contribute, the employer can contribute, anybody can contribute to that account, and that account grows for the child. The account is invested in the US stock market, ETF that invests in the whole market. So many companies now are even saying, if you have that account and you have a child, your company will pay you money directly into that account. Many banks are doing it now. Many banks have said they would match it. Mr. Dell gave about $7.5 billion. It's going to go to the account of those children opened up in low-income zip codes in America. So that's another thing you want to do. So if you haven't filed taxes today in America, just tell your accountant, 4547 account, I want to open one as I file my taxes this year. When you open it up, you put your kid's name there, the account is open. Then going forward, you can contribute to your child's account. It doesn't have to be earned income now. It can be any income. So it's better than the Roth IRA because it doesn't have to be earned income. Your child is born, you put $100 in. It reduces your taxes. It increases the child's net worth. So is it that's how you want to do it? That's how they do it. The Oyibo guys do it. Generational skipping taxes, generational skipping transfers, so that you are able to keep that wealth unencumbered from taxes. So you hear trust fund babies. That's what they mean. Laugh at it all you want, but that's what you want to do. You want to make your kids to have a trust fund. You 10,000 today, in 50 years becomes a trust fund. Right? Is it? So I think I've given you more tips than is it, yeah? We're good, is it? Fantastic. Oh, Ike, how you doing?
Hey, Mr. Carlo, hi.
How you doing?
It's been a while.
Yes, ma'am.
Yeah, I'm so sorry. I got neck deep into a program, and that was taking too much of my time with work.
Gotcha.
And then I had series of family issues. I lost my father. I lost my sister.
I'm so sorry about that.
Anyway, I'm doing okay.
Yeah.
So we'll get to talk soon, right?
Yes, definitely.
Regarding financial stuff, I'm beginning to know more because even from the program I attended at SAIS, I've learned a lot about finance.
Fantastic.
And I joined this because I seem to like the topic, and I wanted to also say hi to you.
Thank you.
All right?
Yeah, really appreciate that, yeah.
You're welcome. So, of course, I have your books. I bought a number of copies. And when you talk about generational wealth, I'm not giving it to older people. I'm giving it to young people, teenagers.
Yeah.
I'm telling my nephew, start to think about your money, right?
Yeah.
Your mom may not be telling you about that. Start to think about your money. Now, with regards immediate family. My question, thank you for mentioning the 4547 account.
Yeah.
I'm just hearing it for the first time.
Yeah.
Is it new?
Yeah, it's brand new. It was just
Okay.
passed. Yeah, it's brand new. Yeah. Mhm.
Okay, so I'm going to ask my employers. Great. So it's good to know because I may have to do that soon in the very near future. But in terms of managing debts, I think I'm good with managing debts, okay? I have fantastic credit score, but I can still learn. So I'm going to be listening, but then I really would want to talk to you one-on-one on how to really... My assets are diversified. I have a big rollover IRA, but I want to do something more. Even though I give the people taking care of it, I give them a leeway to do whatever they want to do because I pay a certain amount of money for them to move things around. But still, they want to hear from me. I'm not too good with that. I wish I grew up in this country from the get-go, right? I'm a little bit timid to moving assets from here and there. But I want it to grow. It's growing, but I think it could grow better. I hear people, my trainer the other day, he was talking about NVIDIA, this, that, do this, do that. I hear all of these things. I never take any action because I still am not confident.
Yeah. Well, I hear you. So again, we're going to talk after the space, so we'll talk and get more specific. But I would say this, right? Investing should be boring. Very, very boring. If it's exciting, be very careful about that. What I mean boring, how do you make money in investing? You pick something that you know is going to grow, you put money in it, you reinvest it, and you forget about it. If you ask Warren Buffett is perhaps the biggest, greatest investor ever in the history of mankind, right? Warren Buffett. Ask him, where should I invest $1 million today? What will he tell you? He's going to tell you to go buy the US ETF that buys the entire market. That's what he's going to tell you. He's not going to tell you to buy NVIDIA. He's not going to tell you to buy Microsoft. He's not going to tell you to buy Berkshire Hathaway. He's going to tell you to go buy the entire US market and just stay there. That's what he does. He has written
You mean treasury bonds and all of that?
I mean an equity ETF or index fund that buys the entire US market. For instance, VOO, VTI. It just means an equity, which means stocks, index fund, or ETF, which means a basket that buys all the stocks in the US.
Okay.
When you buy VTI, you are buying about 4,500 US stocks immediately, instant diversification. When you buy VOO, you are buying just 500 of those stocks. That is tracking the S&P 500. So if you just do that, right, you are getting your NVIDIA, you are getting your Microsoft, you are getting everything that is quote unquote good and all that in America. You can go specific. You can say, I want to buy dividend ETFs, it's there. You want to buy property ETFs, it's there. But just buying the whole market, the US market over time has consistently returned about 6 to 8%. Whatever from 1928. You have your crash, you have your ups and downs, but it's always good. The trend line is up. So over 25 years, the number one returning asset is going to be stocks. Remove Bitcoin for now. It's going to be stocks. Which stocks? US stocks. So sometimes you just keep it as simple as that. Just keep it as simple as that. You win. Not trying to be too... because to buy individual stocks, you need advice. And most of us don't have advice. If you don't have anyone holding your hand, you're going to miss it, right? But if you have someone holding your hand, they're going to pay for, he can give individual stocks to buy. If not, just buy the index, go to sleep, reinvest your income, you're fine. You won't over a 25-year period, I don't see you losing money. When I mean losing money, not beating inflation, I don't see that happening.
Right, okay. I really think that's what my managers are doing, because I pay them a fee every year, and I haven't really asked them to change anything per se, but I think that's what they're doing. They buy, the bulk, VOO, and V, whatever, right? So, but I'm going to go read my statements because I have some paperwork from them often when they change things around.
Send me a screenshot. Just DM
okay.
me a screenshot.
Okay.
For you,
All right. Yeah. Okay, cool. All right. Thank you, Carlo. Let me give the chance to somebody else. And please follow me. I thought you were following me. Okay. That's why somehow I was kind of not sure, how to get in touch with you after a while.
All right,
please follow me. Okay. Thank you.
I got you. All right. No, super nice talking to you again. Yeah. All right. Have a
me too. You too. Bye.
All right. I've got Paradise then GC. Paradise. Hi. What's up? I've got Paradise, then GC. Paradise, you ready to speak? Okay, let's take GC since Paradise. GC, what's up?
I'm good. Good afternoon, Mr. Carlo.
Hey, how you doing, man?
I'm doing very well. Just very quickly, I just want to thank you for sharing very insightful information about finance. So I moved to the US 1 year, 2 months ago for my grad school.
Uh-huh.
And it's been a whole lot of experience so far. But recently we have slight funding issues in our school, and our stipends, my colleagues and I, international students, our stipends have been delayed for a couple months. So it has put me in this sort of financial stress, and I'm afraid my credit is just going down. So I just wanted to ask very quickly, how do I manage the situation, having almost maxed out credit cards, and I'll be happy to learn from you. Thank you.
How many cards do you have?
I have just two: Discover for students and the Chase card, Amazon.
Do you have a job?
Yeah, I'm a graduate assistant, and I'll be finishing my master's this December.
So can you afford to pay the minimum on those cards right now? Can you keep paying the minimum on those cards?
I did until December, but starting the January, it's a bit difficult.
I hear you. Is your score above 700?
No, it actually went lower, around 600.
Yeah. So lower than, because what I've advised was to get a new credit card. Are you going to stay in America? You're going to stay back in America, right?
Mm-hmm. Yes.
So you go get a job. First things first, go get a job that would pay you income. If you get a job that's going to pay income to you, right? That's one. Then I would advise that you try to do a balance transfer. So the balance transfer would work that you would get a brand new card, then you would transfer the balance from your existing card to that brand new card. Usually balance transfers give you like a 12 months, you don't pay anything on the card. You can decide to pay the principal, but they're not going to charge you interest. That buys you 12 months. So if you were able to get a card, that's why I asked about your credit. If you were able to get a new card today, balance transfer. So go online, just say best balance transfer cards in the US. Just Google it. It will give you tons of cards. So when you get best balance transfer cards, pick one that you can apply for. You can't balance transfer to the same card. So you can't do Discover to Discover. You can't do Chase to Chase. But you can do Discover to Chase and Chase to Discover. So you can even swap those cards out, right? If you get a new one, then you do the balance transfer of that existing credit to the new credit card. That buys you minimum 1 year. Then when you get that new job, the income then comes. You don't want to pay down those cards. If you don't want to have a balance with the credit card, especially if you don't have a job, because that can kill you. Because what's going to happen, they're not going to arrest you if you don't pay, but they're going to put a note on your account that you had a charge of. So if you try to get a loan tomorrow, they won't give you a loan. You see what I'm saying? So you want to make sure that you pay those cards out. You want to pay those cards down, really. So number one, get a job. Number two, try and do a balance transfer. If you do a balance transfer, that would allow you to buy more time to pay the principal. You're attacking the principal. If you keep on paying your card, you are simply paying the interest. The balance transfer, because it's not charging you interest, you are paying down the principal, which is what kills the card off. That's what you want to do from this. Just when you drop this phone, just Google balance transfer cards, see the ones that you apply, just go for them.
Okay, thank you so much.
Yeah.
Now, just one more question. Now, since I finished my program this December, I still have around 10 months to go, and my department is still working on our stipends and all. I should never close these cards, right? I should just do the balance transfer, right?
I mean, don't close them, just don't use them. You don't have to use them.
Okay.
So stop using the cards, but just pay the minimum. Then the balance transfer, when you do the balance transfer, you can say you want to close. I don't advise you do, especially that Chase card. I will keep that Chase card. I will keep those two cards, right? Do they pay you a cash back? Do they pay any benefits? Do they pay anything?
Yes, they do.
Yeah, so then you keep those cards. Just do a balance transfer. The card you're going to get is the one you're going to close, because the Chase and Discover were your first cards. So you get your length of time bonus with the old cards. These new balance transfer cards, when you are done, you can close them if you want to. So that means if I have a Chase, right, and I move it to this new card says for the next 12 months, you don't have to pay interest. Fine. If I move it to this new card, 12 months, I'm able to pay down the card, I can close it. I can do that. I don't advise you do, but you can close the card. It will hurt you less than if you close the old Chase card, because the old Chase card is giving you your length of service points. See what I'm saying?
Yes, that makes very good sense. Thank you so much.
Yeah, but the new job is very important. I know what stipend's not a job, right? So you want to get a job that's going to pay you income, because that's how you're essentially going to pay down and also qualify for that new card. Very important.
Thank you so much. I will do that.
Thank you. So you have a good one. Yeah.
Perfect.
All right, Paradise, real quick. Are you still there? So if I run down the space. Paradise, not ready to speak. Why on the line? Okay, what's up?
Hello. Yeah, I just wanted to add, advice to him. Look into opening a credit, finding a credit union. A credit union, their cards you can do a balance transfer to a credit union. If depending on whichever credit union you decide to join, their rates are usually high, and some of them don't even have transfer fees. I just want to add that.
Yeah,
is that okay, Carlo?
Yeah, that is true, because credit unions, they seem to have a lower APR across the board for loans, for credit cards, and all that. So yeah, go for that. Like I said, that's why I said Google. If you Google, it's going to just say the best. It will give you, ask Grok, it will give you all the credit card companies. Some will not give you because they want you to have, is that stipend he's talking about? That's worrying me a bit. If you have an income, fantastic. They're going to ask you what's your income. You can't be saying stipend, because it won't really, it might even give you a card, a lower card number, 1,000 or so. So if you get a job, because once you have the job, it's going to ask you what's your annual income. Then you're just going to quote what you think you're going to make annually from that job. That gives you a higher credit limit that you can move the entire card. It won't make sense to have a new card and just move 25% to that new card, but you're still paying 75% on the old card. That's too much work. Yeah, so step by step for him. Thanks, Uraki. Yeah, credit unions, like you said, credit unions, go to credit unions. I think they have lower APRs, all things being equal. Yeah. Dubé, what's up? Is that Dubé? Hair Fortune. How you doing, Dubé? Hair Fortune.
Good evening, Mr. Kenneth.
Hey, how you doing?
Yeah, good evening.
Okay, what's up?
I'm very well, thank you. Good evening, everyone in space. Yeah.
Thank you. I don't know. I've been having network issues, so I'm like going off and on, and I haven't even attended your space in about 2 weeks now, and it took me back sometimes, right? So, back to the topic, right? How to raise your credit score and manage debt. I heard some part of this as in your explanation and the insight you gave, right? But I wanted to please speak about, I don't know if you talked about it, right? I want to speak about Nigerian credit score and bank rates, around Nigerian bank rates, how to get credit. And I know it's already late. If you can do something like this at some other time, maybe just put it, because most of this information I got here are mostly credit cards internationally, right? People that are not in Nigeria, right? People in Nigeria would like to know how banks operate their credit account and things around.
So it's good to see that here. Does Nigeria have credit cards? Do they have credit cards now? not. I know they have access.
Yes.
No, hold up. I know Access Bank has got Visa, Black Cards. I know about that. But for the rank and file Nigerians, do we have a credit card? Do we have that?
Well, I don't know if, because I know about Access Bank, right?
Yeah, that one is high end. That one is high end. I know that one. Talk about the normal like.
You know, they also have credit accounts which you can use your debit card to access. Right?
No, not the same
they
thing.
have a credit account which you can use your debit card to access.
That's not the same thing, because like you said, like your question is like, I got your question. I think it's valid. I tried, when I did my research, I tried to find out about Nigerian credit cards. There's really none, right? When I mean none, at the consumer level, there are cards that are available for the high net worth, very mobile Nigerians. They have cards available for them, but for the rank and file consumer, it's difficult for them to get a credit card. We have consumer loans, yes. We have personal loans, yes. You can buy generator, but credit cards for some instance hasn't really gone around. So yes, I agree with you that my space is, if you are just Nigerian based, it's difficult to really follow. But it's the same principle that the Nigerian credit card companies use. So I put 3 of them. I'm going to go back to them. I put 3 of them up there: Credit Registry, CRC Credit Bureau. My good friend is there. First Central Credit Bureau. It's the same principles of pay on time, keep your DTI low, don't have a negative impact on your score. It's the same principle. So whether it's Nigeria, whether it's Canada, whether it's the UK or the US, it's the same principle they're going to use. It's just different. It's just going to be how available do we have these cards in Nigeria when you compare them to other places. But it's the same thing. And again, remember that many people, what I'm talking to really for the Nigerians that have jackpot, that go from Nigeria to Canada and then think because, we have no credit cards in Nigeria, okay, I'm going to save money, then I'll go get a credit card. That's a big mistake people make, Like I'm saying here, get a card, if possible, your first month. And how? Go and get a secure credit card. It counts 10% towards your score. That's the point I'm trying to make across. So again, these things are important. You can get a card there. It works in Nigeria. Many people use their credit cards in Nigeria that they got abroad. It works. So it's now a global village. If you can get credit in Canada to do business in Nigeria, that's a hack. That's a hack. I know people in Nigeria that use their US credit cards here in Nigeria, not to pay for gas, but to pay for things in Nigeria, to pay for goods coming in, to clear things out, all that kind of stuff that they pay internationally. It works. So it's good to know the principles why you want to have a good credit score. Yeah, but your point is valid. I take it into your point is valid. So to your other point, you are saying about loans and all that. Yes, I hear you. Maybe we'll do a space on how to do personal loan. It's the same thing. It's just how do you do it, right? One thing for you is Nigerians don't understand what APR means and the difference between APR and interest rate. Nigerians will say, what's the interest rate? They should be saying, what's the APR? APR means the annual percentage rate. Why is it important? Because in Nigeria, most times when you go to the bank, they'll tell you, we're going to give you a loan at 5% interest rate. you should always ask the banker, okay, what is the APR on this loan? Not what is the interest rate. The interest rate just gives you the interest. But the cost of the loan is the APR. Because why? In Nigeria, they add management fee. They add legal fee. They add all these things onto the loan. So for Nigeria, APR is very, very important, not interest rate. In America, they don't have a lot of fees. So if they tell you interest rate of 4%, highest APR might be 4.5 or 4.2. But in Nigeria, you can get interest rate for 5% and APR at 10%. It's possible. They will add legal, management, they will add all these things. They add everything in. So, and how do you compare? You don't compare interest rates with Bank A and Bank B. You compare APR with Bank A and Bank B. So that's one thing I would say for lending in Nigeria. Ask them about the APR, not the interest rate. Always ask them again, number 2, if you can pay down without penalty. So penalty means if you borrow from Nigerian bank and it's a 4-year loan, if you come back with money in 2 years, would you pay any penalty? Ask them about that too. So that way you are giving yourself a call option to say, I want to close this loan down without penalty. Very, very important. Find out from them, of course, if the loans go up, will my loan also go up? The answer will tell you is yes. Is there a cap? Is there a barrier? Find out all those things. Because Nigerian lending and the US lending is very, very different.
Way too different things.
Very, very different. America has no recourse loans. So if you go buy a house and you can't pay, you give them the key, you go away. Highest, they will mess up your credit report. If you buy a car, you can't pay for the car, you drive the car to their office, park the car, you go away. Nigeria is different. If you can't pay that loan, they will go after your farm. If they can't go after your farm, they will go after your private jet. So just be big. There's always a recourse to them. So all those things are a bit different, but it's the same principle in terms of how those loans work. Difference is going to be how it's operationalized. But excellent question.
All right.
All right.
Thank you very much.
You're welcome. Appreciate you. All right, guys. Looks like we covered all the questions. You guys have all been well fed today with issues about credit, managing debt. Let me just talk really quick about managing debt before I let you guys go. So if you want to manage your debt, very, very simple process. Number 1, list all your debt. List all your debt, number 1. Number 2, try to attach the cost of that debt, i.e. what's the interest rate. Like I said, APR. Get the APR for all the debt. So you have 3 credit cards. List the 3 credit cards. List the 3 APR. Start to pay the credit card with the highest APR first, not one with the highest balance. Pay the highest APR first. So if you owe 2 cards, one is 10,000, one is 5,000, the one has a higher APR. Pay the higher APR down first. That one costs you more. When you pay it down, take the excess money and start to pay the second one. Then pay the third one. That's how you want to do it. Pay the highest APR first before you go to the highest amount. The amount doesn't matter as much as the APR. That's how you want to manage your debt, right? Don't take debt you can't pay back, and only borrow interest-bearing debt to pay income-generating activities. Say it again. Only borrow interest-bearing debt to pay or to buy income-generating opportunities. So that means don't use your credit card to go for holiday. I know it sounds like that's what it's supposed to be used for. No. Use your credit card to pay for the holiday because you have cash in your debit card, in your account you can clean up immediately. But use your credit card to get the points. You don't use your credit card to go for holiday. That's using an interest-bearing debt for a non-income generating activity. Don't ever do that. Only use your credit card to do transactions that you can pay back or can generate income for you tomorrow. All right, folks, on that note, we're going to call today. Thank you guys so much for listening to me. Let's go watch that Super Bowl, and may the best team or the team with the Nigerians win. That's how I'll put it, right? I'll see you guys next week. Be here. We're going to have a seasoned stockbroker, big boy. He's going to come in here and talk about the Nigerian market. Where can we invest? Where should we put money? He's going to give you the stocks to buy. He does that every week. He's telling you, buy this stock, buy that stock. Come with your paper, come with your pen. He's going to give you name the stocks. That's what he does. So experienced guy, was once their leader in the stock market and all that. So be here next week when we have him online. And of course, you guys be blessed as usual. All right, folks, I'll see you next week. Let's go to the Super Bowl. You guys take care and bye.
Yeah. Can we talk maybe some other time, because there's a lot going on today. I'm trying to get my paperwork ready, but I can text you for a schedule.
No problem.
Okay. Thank you.
All
Enjoy
right.
your Super Bowl. Bye.
I will. All right, guys, take care now.
And basketball. Don't forget that too.
Who is playing basketball? Who?
I watch basketball. That's my life.
We can't be talking Super Bowl and talking basketball. Though. You can't be bringing that one here. Super Bowl, you're talking basketball. Super Bowl, yeah.
Basketball is
basketball
is the
I'm not eating. I'm fasting this Sunday morning because I'm going to eat.
for Super.
Yeah, I'm going to eat the life of my head this afternoon when I watch Super Bowl. So I'm going to my friend's house. They are cooking forget about it, man. There are no cars.
Mm-hmm.
There are no cars on the road. No cars on the road. Everyone's watching Super Bowl. Do you know? And I just posted an article today. The economics of Super Bowl. It's crazy. We talk dirty December, but this is the real dirty December. This is just one game. An advert is $7 to $10 million for just placing an ad. You see what the local governments are going to earn. Yeah, I can give you the post. What the local governments in the Bay Area are going to earn from just this Super Bowl coming to them. So what they've done is that they've taken a sports game and they've turned it into economics. You look at the San Francisco is going to earn, this is the local government too, San Francisco will earn $137 million. San Francisco. San Jose, $29 million. Santa Clara, 17. Oakland, 9 million. This is just money that the guys are going to pay the local government. You're talking about the Super Bowl generated $1.25 billion last year in Louisiana. They're going to see.
I'm gonna make my own research on basketball and start bringing breakdowns for you.
You guys have series, 7 World Series. You don't have Super Bowl, so let's leave that matter. Common Arsenal game versus Chelsea will give you guys more than this one you're talking. All right, man. Nice talking to you.
No, stop talking. All right, take care.
All right, have a good one. Take care, man. Love you.